Anyone who follows me here on the channel or on Twitter knows I've been waiting for this baby for more than a month now. This is the perfect swing opportunity before the perfect storm. A smorgasbord of technically aligned beauty and short-term explosives. I'll cut straight to the chase in this episode, for this time speed is of the essence. So, here are the technicals and why I am so excited about this trade. But first, not financial advice, and if this episode helps you fully understand what we are looking at here, then dropping a like and subscribing are the best ways of showing that appreciation. And while you're at it, please do share it with others who may benefit from hearing this too. Now, the technicals in this baby beautifully come together, to the point where I almost want to shed a tear of joy. Many people have wondered lately whether the late October spike would have been a good entry spot. But I said no, that it is the zone or nothing, and that I will await it with the discipline of a Navy SEAL. And here we are, the wait paid off, so far at least, and this is exactly why patience is a virtue in trading. We are now trading at a historically strong support, properly depicted with this red zone and with 7 touches on the upper line so far on the weekly chart. Basically, this level has acted as a support and resistance throughout Realfiction's 3 years on the stock market. This level on its own is strong enough to merit a swing long, but it gets better, much better. First of all, this level just so happens to perfectly align with the 786 fib. This fib in turn speaks volumes, as it not only signifies an 80% decline from the previous move, but also because it has dropped as steeply as it has. And this part is absolutely key, for if Realfiction were to have dropped by the same percentage but over a much longer period of time, hence causing the decline to be one of disinterest rather than one of a panic, then I would shy this company like the plague. Or the corona. The steepness herein is what gives this stock its explosive potentials, but more on that in just a bit. We have descending trading volumes throughout this down move. This on its own is a psychological sign that the sellers are getting exhausted because most people who want to get out have already sold off. If it were to be the other way around, however, that we'd seen increasing trading volumes throughout this down move, then I would never consider moving in on this one. More on, we don't have enough data to get an EMA 200 on the weekly, as there are so far only 175 bars available. If we make this as close as we can to an EMA 200 though, by setting it to an EMA 170, we see that this level is right at 17 kroner. This basically means that 17 kroner is the average price of all bars, but with an exponential emphasis on the latter bars as they have more psychological weight. And as we know, EMA 200s on the weekly and monthly are incredibly significant. This on its own hence constitutes a strong level of support. And finally, the cherry on the top, which in itself is bigger than the actual ice cream. If things remain somewhat stable at these levels, we may be looking at a weekly close at the lower bullish red RSI line. This would be absolutely, pardon my French, fucking massive, and again goes on to prove the steroid powers of these techniques. And if you haven't watched them already, give yourself a weekend treat that beats any Paris trip or spa massage and watch this trilogy. But, and this is where things get really interesting and, more importantly, where they get truly relevant. For if this trade were to be based solely on these aforementioned parameters, it would still be a strong trade, but it wouldn't be that much of a deal. Here's the thing. I don't know why Realfiction has gone down by as much as it has. I don't know the fundamentals behind it, and frankly speaking, I don't care. What I do know, however, is that whenever an equity goes down as much and as steeply as Realfiction has, we're typically in for a relief rally. These are temporary relief from selling pressure and are typically steep, relatively short-lived, and disassociated from any fundamentals. This is emotion in play at their prime. Two prime examples are Quickbit and Bitcoin. In Quickbit, the price peaked at 2050 and went down to 7 kroner, or minus 66% in 2 weeks, after which it rallied by 150% at most in the upcoming 2.5 months. In Bitcoin, the price went down from $19,900 on Bitfinex to $10,700 in just 7 days, a drop by 46%, after which it went up by 60% in just 2 weeks. And you will find plenty of scenarios like these out there, scenarios that are psychological overreactions in both directions. And to further add to the case, the Swedish OMXS30 index does show short-term strength with a potential ascending scallop. These are typical continuation patterns that few may be aware of. Thomas Bulkowski talks about them in his book Getting Started in Chart Patterns. In this case, we're talking about the upcoming few days or couple of weeks at most, which might be more than enough time for Realfiction to work its rallying magic. But to be perfectly clear, make no mistake, for the overall index status is more than ever one of weakness and ambivalence. I've already taken an initial position at 1860. This is marginally above the box, but I'm fine with that, as it was the opening price on Thursday. By the time I took the trade, the price had already traded well into the box during the opening minutes, moved up and above it, and I seized the moment to get a good volume trade in at this very level. This initial position amounts to 13.5% of my portfolio value. The second entry level I'm looking at is at around 17 to 1750. This is where I will go in much heavier. We're talking a position of at least twice the size of the initial one at 1860. And if the price were to further drop, I will add on an additional 13.5% at 16 to 1650. I doubt the price will hit this level, and frankly speaking, I'd prefer if it wouldn't. But even if it were, that level and the 17 to 1750 level would generate a massive risk to reward opportunities. If the price were to rather stabilize at around 17 to 18 and move up towards the golden 1855 level by Friday's closing, I will regardless top up my position with a final 13.5% of my portfolio. All in all, this would amount to being in for some 54% of my portfolio value. This of course is extremely risky, but is also a trade of extremely high potential. But given the risk to reward, I in fact don't stand to lose that much. Having said that, I recommend no one to follow this lead. This is a highly calculated risk, one in which I'm personally ready to pay the premium. This brings us to the stop loss, and the stop loss strategy in this case is rather multifaceted. First of all, my main stop loss is any closing candle below the box and with a few percent safety margin. In this case, we're talking any closing under 15 kroner. But given that this is an overall volatile stock and the fact that I don't want to risk getting wicked out, I also have a separate wick stop loss. This means that I will not automatically sell just because the price is trading below 15 kroner. No, in this case, I will set a separate stop loss for outlier wicks. Wicks that statistically would mean that the fun is over. And in this case, I have set it at 1340. So practically speaking, any stop loss price would be lower than 15 kroner. But this is still a risk I'm more than happy to take, for not only is this sub-box area unlikely and the risk to reward strong, the technicals are perfectly aligned for an explosive storm. Having said that, I will strongly consider re-entering my positions, at least half of it should I get stopped out in what might prove to be a fake out, as those have a statistical tendency of moving fast and aggressively in the other direction. But if the price were to close and stay below this zone, then this prospect is entirely annihilated and all the massive sentiments and potentials in this trade will swap to utter despair. In such case, 6 kroner is the next level of relevance. And finally, the targets. Volatile equities like these are difficult as you need to be both cautious and attentive. It is impossible to predict how far the price may go, as the stock price in turn is dependent on that of the Swedish index. And to push it even further, the Swedish index is in turn dependent on that of the global and American indices. For this reason, we're going to play it safe with 5 targets. My first target will be at the previous local high at around 2450 to 25 kroner for a roughly 45% increase, as this also is a minor horizontal resistance level. At this level, I will sell off 7% of my entire position to secure at least some profits, and at the same time I will increase my stop loss to break even. If this scenario were to play out, it would roughly amount to a mere 1.5% increase of my portfolio. And this of course presumes my position has been filled. My second target will be at 27 to 28, as this is the initial all-time high and which now on its own constitutes a level of resistance. It is also a little fib confluence of the previous 618 fib and the new 236. At this level I will sell off 30% and the stop loss will remain at break even. If this stop loss were to be hit after having reached the second target, then this scenario would amount roughly to a total of an 11% increase of my portfolio value. My third target is at the 382 fib at 35 kroner, which also coincides with the previous 0.5. At this point I will sell off another 30%, but instead of keeping my stop loss at break even here, I will use a 2-bar trailing stop. All in all, such scenario would approximately amount to a plus 36% increase of my portfolio value. My fourth target will be at 40 kroner, which is the 0.5 fib and near enough the old 382 level. Here I will sell off 25 of the remaining 33% and still keep a 2-bar trailing stop. This scenario would roughly amount to a plus 45% of my portfolio value should it occur. And finally, the remaining 8% I will free roll with and automatically release upon any 2-bar trailing stop. I strongly doubt this will surpass the 618 fib at 46 kroner though, for steep moves like these, especially when they retrace back to the baseline, rarely recover more than that. And even if it were to, I will still be incredibly grateful for this trade opportunity regardless, for gratefulness is great, greed is not. And at this point there is only one thing left for me to say, and that is, let us now all sit back and watch this dramatic nail biter unfold. That was all for now, thank you and goodbye.